Stocks in Asia were mixed on Wednesday following another inversion of the U.S. Treasury yield curve to its worst level in more than a decade. The spread between the 10-year Treasury yield and the 2-year rate declined to -5 basis points, its lowest level since 2007, which investors take as a sign of an impending recession. A day earlier, China announced measures aimed at raising consumption, including a potential removal of restrictions on car purchases. This step helped to ease the downside pressure on high-yielding assets, though risk aversion was still in place amid heightened trade-related uncertainty and yield curve inversion. As a result, Shanghai Composite declined 0.29% to 2,893.76. Hong Kong's Hang Seng Index was 0.2% lower. The Nikkei 225 in Japan added 0.11% to close at 20,479.42. South Korea's Kospi closed 0.86% higher at 1,941.09. In Australia, the S&P ASX 200 rose 0.45% to 6,500.60. Overall, the MCSI Asia ex-Japan index declined 0.05%. Meanwhile, European stocks ended yesterday's session lower as the U.S. yield curve inversion deepened to the worst level since 2007. The rate on the benchmark 30-year Treasury bond also hit an all-time low. The Stoxx 600 fell 0.4%, while the German DAX and the French CAC 40 dropped 0.5%. Meanwhile, the UK FTSE 100 gained 0.35% amid a sell-off in the sterling. The pound fell 0.4% after the Queen approved British Prime Minister Boris Johnson's plan to suspend Parliament. According to the official statement, the Parliament would be suspended on a day between September 9th and the 12th, lasting until October 14th. On the data front, German consumer sentiment data showed consumer morale remained unexpectedly stable heading into September, despite the deteriorating economic growth outlook in the country. In the U.S., stocks rose on Wednesday due to a lift in the energy sector from higher oil prices. However, bullish sentiment was kept in check as U.S. curve yield inverted further, exacerbating fears of an upcoming recession. The Dow Jones Industrial Average closed 1% higher at 26,036.10. The S&P 500 climbed 0.7% to 2,887.94, while the Nasdaq Composite advanced 0.4% to 7,856.88. The S&P 500 energy sector jumped nearly 1.5%, led by an overall 10% rally in Cimarex Energy amid a rise in crude oil prices by more than 1%. Brent crude jumped above $60 after the Energy Information Administration said U.S. crude inventories declined by 10 million barrels last week, the largest drop in 5 weeks. However, the prices failed to preserve the upside impetus and had to retreat as the official report also showed that after remaining unchanged for 2 consecutive weeks, U.S. crude oil production averaged 12.5 million barrels per day, up by 200,000 barrels per day from the previous week. In currencies, the greenback gained against major counterparts, with the euro-US dollar registered fresh local lows around 1.1070, threatening an important intermediate support at 1.1060, a break of which will open the way to 1.1025. The common currency is under pressure from a stronger dollar and an expected stimulus package from the ECB. The US dollar-Japanese yen contributed to trade in a mixed manner, with the pair managing to stage a rebound and closed marginally above 106.00, though the greenback is already under pressure again early on Thursday as investors still tend to prefer the safe haven Japanese yen amid global uncertainty. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.